This is Tom Nunamaker with Amy Corporation. I'm going to do a trade review for the 6th of March, 2023. So here's all my trades. I had a total of 6 trades, 5 winners, 1 loser. The loser was a little vertical spread I did at the end of the day, $18. And I made the rest were profitable. Total for the day, $440.74. And you can see we did a Jim Olsen iron fly, a couple narrow iron condors, and a couple of vertical spreads at the end of the day. I wanted to mention that we're doing a 0 DTE workshop. We're kicking it off on a roundtable on Wednesday, a free webinar to kind of go over it and what we're going to cover. And you're welcome to join that. I'll put a link below. And it's going to be a really good workshop. We're going to have 5 educators. I think 11 strategies, spreadsheets, live trading, forums, free access to a bunch of really great services. So definitely worth the money, and you get a lot out of it if you're interested in 0 DTE trading. But anyway, let's go over today's trades real quick. So first trade was the Jim Olsen iron fly. We put this on right after the open. And then actually I got filled in an order for 4. One got filled at 21.25. The other 3 got filled at 21.10. And then I think it was, let me pull that up. That was 13 minutes and 50 seconds in the trade. We were out for $83. The market started moving up, and I had a profit a little bit more, like 150 or so. I think I saw 200 at one point. But the market started moving, and my philosophy is if I have a profit and the market looks like it might be threatening it, I'll just close it and take a smaller profit and move on, recenter the trade with another one. So the next trade I did, that closed at 7:46. The market, this is mountain time, so this is 7:30 when it opens. So 6 minutes later, I put another trade on. I was in that for 2 hours and 49 minutes, so almost 3 hours. So let's pull that one up real quick. That was trade B. Let's see here. Here we go. So let's undo all this. So here's the first trade. And again, it's a narrow iron condor. And then here I rolled the calls up. No, I took the calls off. Market looked like it was starting to rally fairly strongly, and I was curious. The expected move was somewhere near the break even, maybe even a little bit inside of it. So thinking, well, this looks good for just a vertical spread. It was $380 of profit. I was like, you know what, I can do a little better. So the market had moved a little higher. So I sold the original calls for 40.80, then I sold the 40.95. So I went 15 points higher, resold them, created this condor. And then we let's see, 75.80. Oh yeah, I put on a small vertical spread. And the market looked like it was going higher, so I put one on. It got up to about 225 or so. It did rally a little bit, and then it started pulling back. So I was like, well, I'll just close this and just take it off, because it didn't look like it was going to keep going. So I lost 15 cents on that plus commissions. And then I wanted to get a little bit more credit. I was at 850, so I sold another one, bringing it from a 4 lot to a 5 lot. And now we're up to 11.15. If you look over here for the credit, margin on this trade was about 23.8, so call about 24,000. Then, so I'm at the 40.95 short calls, and the market was running up a little bit more, so I rolled the calls out another 10 points. You can see that. And then, what did I do here? 41.05. Oh yeah, I sold another call spread to bring in 50 cents more credit. The delta was pretty low on this, like 7, maybe 5, can't remember. And then I wanted to put another trade on, but this is using a lot of margin. So I was able to roll up the 39.85 puts to 4,005 for 10 cents. So 10 cents, and that was, what, 20 points times 5. So $10,000 freed up of margin. See that? Now it's at 14,000. Oops, here it's at 24. So this was a margin reduction trade for a dime. And then I sold 2 more of these new spreads. This one, because I had more margin available, I basically did put on a new narrow iron condor layered on top of this one. So that's this one. That's the 2 combined. And then the 40-50, 40-10. Oh, I bought in a couple of the put spreads. And then the rest of the put spreads, or call spreads, it was just widening out the condor. And then there wasn't a lot of, well, it was $615 of premium, but I can't remember where the market was exactly, but I wanted to just close it because the theta was kind of low. I think at the time it was maybe 500 or something. So I put an order in to close it, and then it flattened it out. And that trade made a net after commissions of plus $191. So after that, I was up about 277, something like that. And then the next trade was another narrow iron condor. So I closed that at 1041. Put this on about 50 minutes later. So that would be this one. Let me import this straight C. And right. So here's this iron condor. Again, it's a narrow iron condor. Started out with $870 of premium, using 14,000 of margin. And then let's see, what am I doing here? I'm rolling the puts down, so the market must have been heading a little bit lower. So I rolled 1 out of 3, 2 out of 3, 3 out of 3. So now the puts are all 10 points lower, and trade's a little bit safer. And then I sold another one to bring in more premium, just basically increase the margin, but increase the premium here. And then there wasn't a lot of theta on this, so I wanted to close it, and I was trying to get it closed for 90 cents, and it wasn't closing. So I put in an OCO order, one cancels the other, to either close it at 90 cents or box it off for the width of the spread minus 90 cents, so 89.10. So you can look at the width here. 95 to 35 is 40, 41.25 to 75 is 50, so 40 plus 50 is 90. 90 minus the 90 cents is 89.10, so that was the box. And that ended up creating things like this, where it was a long 4 calls at this strike, short 4 puts at that strike, long 4 puts at this strike, short 4 calls at this strike. So this is a bearish, I use my arrow, going from plus to minus, that's a bearish spread. And going from plus to minus, this is a bullish spread. So they're at the same strikes. So this is a bearish, that's a bullish, same strikes. They cancel each other out to make a flat line. And that's boxing it off. So I did that for basically the whole trade. And it ended up flatlining like this. Made $145 before commissions. After commissions, it was $103.58. So at this point in the day, I'm up $380, $381 roughly. So I did one more narrow iron condor. Let me load that up for you. Let me import that. I think that was this one. 290, no, 360. That looks right. So I did a 3-lot iron condor. It's a little bit narrower. We're getting later in the day. And then let's see, what did I do here? 40-10. Oh, this was the commissions. So I was trying to keep track of commissions. And the way you can do that is buy and sell the same strike, a single, and set the sell price to 0 and the buy price to your commissions. This was, at the time when I did this, $26.16 of commissions. And that helps keep track of what your real P&L is. So if I put the commissions in, then, so what did I do here? I rolled the calls up 5 points. You see it's widening it out. Narrows this side up, decreases the margin on that side, cuts the delta down. And then here I roll the puts down 5 or 10 points. So I rolled those up 5, rolled those down 10, so that made it a little bit more bearish, but trying to keep it centered. And then I wanted to bring in a little bit more premium, so I sold one more, and now I have a 4 lot. And then I was able to close this one for 50 cents, flatline it out, and it basically was a scratch. I made $22 on that. So at this point, I'm up $403 for the day. And then right near the end, this was a half an hour before the close, I put on, it looked like the market was going to head lower, so I put on a bearish vertical. I sold some calls, but the market reversed, started heading higher, and this got up to let's see, 40. It actually was 60 cents, but when it came back to 40, so I'm just going to close it. And then I closed that at 48, and then a minute and a half later, it looked like the market was going to, it was wanted to head higher. So I sold the put spread. Now this I did one time, so I lost 15 cents minus commission, so total lost $18. So that brought my total for the day to 384. And then I sold a 2 lot at 30 cents, and that expired worthless. And that brought the total profit for the day to 440.74. But this is the kind of trading that we're going to do in the workshop. The workshop is at aramir.com/0DTE Workshop, like that. I'll put the link in there for you, but you can see what we're going to cover. A lot of great speakers, a lot of free things you get with it. Wayne Klump, he runs the Sleep Well portfolio. Scot Ruble over Stratton Trade is going to give you a free month of practical option tactics. I'm going to give access to the daily trading room during the workshop, plus another month after that. So about 2 months of the live trading room, and that's worth probably close to $300. That's worth about $300. I think that's worth about $300. So just the bonuses alone are worth more than the price of the workshop, but there's, I think, 11 strategies in there, and it'll be really, really worthwhile. But we are going to have a roundtable on Wednesday, again, talking about this, and the registration link, again, I'll put it in the chat, but it's going to be at, let's see, where is it? March 8th at 11 o'clock my time, so 1 p.m. Eastern. And we've already got 200 people registered for it. We can hold 1,000 people in the room, so we hope you can join us and find out more about it, see who the speakers are, what we're going to talk about. And if you're interested, sign up. It'll be a really good workshop if you like 0DTE trading. All right, that's it. Hope you enjoy it, and we'll see you soon.